All right, what's up, guys? Welcome back to the Junior Markets YouTube page, and today we're going over a new stock of the day. This stock is Yum China Holdings. Now, I know that sounds interesting, but I promise you this thing might be a gold mine. I know this says stock of the day Celsius, and I'm going to change that after I finish filming this video, and then I'm going to switch out the videos. But today we're going to be going over this company, and we're going to be looking over a few of their metrics, the opportunity, the balance sheet, some stuff like that. So I made a Word doc that you can download and get all this information, or we're going to be going over it in this YouTube video. So make sure to either check that out or check this out. But yeah, let's jump right in. So first off, this is a stock traded on the New York Stock Exchange, but it is based in the People's Republic of China. It has headquarters in Shanghai. So really what this company is they operate through fast food restaurants. So they own the restaurants and they franchise restaurants. Franchising restaurants means that they have restaurants in like a KFC inside of a gas station, stuff like that. So they operate through restaurants as KFC, Pizza Hut, Taco Bell, and then Huangji Huang. I apologize if I said that wrong. But they recently just acquired about either 600 or 700 of these restaurants, which is pretty interesting. So first, we're going to hop into the opportunity where I think the opportunity lies. So this this holdings has become a dominant player in China's fast food industry, mainly through KFC. So KFC kind of exploded in China. They had their first restaurant in 1987, and then they just kept growing and kept growing. And what I like about them is that they supply most of their supply chain is run at a unit cost 50% lower than their industry. I got this off of Morningstar, so we know it's true. And they do this by growing most of their food close to the restaurant and having most of it having almost all of it locally, which helps keeps costs low. And then they also are switching over to AI. They have personalized menus and streamlined ordering. So they have about 380 million members on the rewards app, and then 90% of their sales are digital. And what I like about this is that it puts personal customizations on the app. So when people who normally order, say something like a salad, go onto the app, they'll get healthier options, so they're more likely to reorder. So if you go on there and order chicken, chicken all the time, you're more likely to see chicken at the top of your recommendations, which means these reoccurring customers are more likely to come back. Now, because of this, because they're in the restaurant industry, one of the most important things that we like to see is their margins. So we love to keep track of their margins, and I'm going to pull up another website now, and we're going to check out some of their margins. So now we're over on Schwab, and what we're going to be looking at is operating margin, gross profit margin, stuff like that. So let's go down into their trading. There we go. This, obviously, I've used this before, but it compares it to similar companies in the same industry. And so first, we're going to head down into look at some margins. So first up, we're going to look at operating margin, which should be somewhere down here. Yep, here we go. So operating profit margin. So operating margin essentially measures how much profit a company makes on a dollar of sales after paying for the variable costs. So this is things like wages, raw materials, stuff like that. And normally, the higher the ratio, the better. So we can see this company's kind of in line with their competitors, which is fine. And then gross profit margin. So this assesses the company's financial health, similar to operating margin, but it takes the profit remaining after subtracting COGS, which is cost of goods sold. So this shows essentially how much money a company makes after accounting for its business costs. So a typical profit margin, according to Investopedia, I read was about 5 to 10%, but it obviously varies widely. And this gross profit margin is significantly higher than that, but It's in line with a lot of their competitors. So even though that it's very high, we do like to see that it's very high, but it's in line with competitors, so it's not necessarily anything special. And then another thing about this company is they didn't have a lot of debt. So it's good for companies to have debt because you have to take on debt to expand. But it's good not to have too much debt where it's all of your financing is based on debt and it becomes too much to handle for the company. So when we look at the current ratio, we can see it's over 1, which means they have more assets than they do debt. And when we look at the quick ratio, which takes out inventory, we can see that it's still above 1. So this is what we like to see. They have more assets than debt. And I think I listed on the Word document they have about $2.7 billion in debt on a $13 billion market cap. So that's not horrible at all. So now we're going to head back out. And this company does pay a dividend. We're going to get into that in a second. But first, let's go into earnings, sales, and revenue. So as we can see, earnings, they've been a little all over the place lately. But they have consistently gone up and beat. And then the Q3 2024 earnings are expected to be 0.67. We can see that in the PE ratio going down, so the forward PE is lower than the current PE. And then if we look at revenue, the revenue is expected to increase 5.5%. The 5-year revenue growth is 5.5. 3 years, almost 10%. And then cash flow also supposed to go up 3.3% with an annualized 5-year growth rate. So that's really nice. So their earnings, their revenue, and their cash flow are all projected to rise, which is something we love to see. And then if we go into dividends, this is really cool because I did a video on how to invest in dividend stocks and how to look at dividends for a company. And so first, we're going to look at their dividend coverage ratio. And so the dividend coverage ratio essentially shows how much out of net income, or how many times out of net income a company can pay their dividends. So if it's 100%, that means a company is paying 100% of their net income into dividends. So with this company being 357%, this means they can essentially pay 3.5 times their dividends with their net income, which means this is very strong. And then their 3-year dividend growth rate is 30%, 5 years 4.4%, which is obviously well above inflation. We love to see that. And it's currently at 64 cents a share with a yield of 1.89%. But the yield doesn't really matter. Like I said in that other YouTube video, it doesn't matter about the yield. It just matters about growth, consistent growth, and what you think growth in the future is going to be like. So I'm pretty sure right now we're at 16 cents a share. But so that was the main rundown of this company's financials, the dividends, the balance sheet, some stuff like that. And then I have a little bit more information in the Word doc about some other things I go over, such as management, and I've listed a few more metrics. But other than that, that's where this company, that's what this company is kind of about, and where I think some opportunity lies. But now we're going to get into why I did this video, which I think is kind of insane. So if we're going to head over onto Morningstar, and we're going to go first, we're going to look at their fair value, which is $76, which is a little bit less than double the stock price is right now. Their 1-star price is $102. Their 5-star price, which is essentially the lowest end, is 53, which is still a little bit less than $20 more than it is now. But if we head down to the bottom, we can look at the transactions of the insiders. So the chief people officer, the chairman of the board, the directors, the CEO. And if we look over at the transaction types, we can see acquisition, buy, acquisition. And then if we head on over into this other website, we can see that Republican. So even Yum Brands right here. So even House of Representatives members are buying this. Essentially, everyone, insiders and people in politics, are buying this, and they're all buying it at the share price that it is right now. So right now, the stock is trading. If we head back up to the top, it's trading at 38.85, and all of these people are buying this stock at 33, 34, 33. So all these people are buying this stock. This is in the last few weeks. So this is the price that all these people are buying this at. And so if you look into this stock, obviously you should look into it more before you buy it. You shouldn't just base it off this YouTube video or anything I upload. But if you look into this stock, a lot of people are buying it, and that is definitely a very bullish signal. So that is the end of the video. Thank you so much for watching, and I am trying out a new screen recorder to see if it works better than the other one, because I didn't really like the way the other one recorded. It was kind of slow and laggy. So we'll see how this goes. We might go back to the other one, or we might stay with this one. I am trying to stay with something free, obviously, because I have a lot of things to pay for. But thank you so much for watching. Make sure to check out Junior Markets on all of these pages, Instagram, TikTok, YouTube, Twitter, Facebook, all that type of stuff. I'll be posting updates on when I have videos, and then also some news on the markets. I just try and keep everyone updated. So thank you so much for watching, and have a good day.